So for my next question, what is the difference between tax prep and tax planning?
Oh, that's a good question. Let me bring up the little checklist I made. See if I can actually find it. The difference is, let's share screen here. All right, the difference is one is reporting the facts and the other is planning ahead to make the facts in your favor. So a lot of people think that they're getting tax planning when in fact they are getting compliance. So in the tax pro business, there's the compliance work, that's filing the forms and filling things out and making sure everything's accurate. And then there's the planning work, which is, what can we do? What strategies can we implement? And some compliance filer people will mention some stuff. Hey, if you contribute to your IRA, or if you did this, or if you did that, then you could save some money, right? But that's like the limit of it. What this self-check does is it goes through and you just kind of score yourself. I did this, or my tax pro does that. Check, check, check. And you get a +1 for each one of these things. This is the basics. Strategic tax planning, these are the kinds of things that we look at. Proactively identifying self-tax saving opportunities, helping you plan for major financial decisions. Hey, I'm thinking about buying a house. I'm getting married. I'm getting divorced. I'm whatever. I'm hiring employees. Communicating regularly throughout the year, offer advice on entity structure, retirement plannings, wealth building strategies, helping you understand the why. So a lot of the stuff that I am going through here is trying to explain the why of things so that people can understand how things might apply to their situation, right? Actively looking for ways to minimize your tax liability. And that's basically what I do all day, every day. But if you get one of these, then this is actually a -1 score. And so you just count up whatever your score is. And then there's a little score area, room for improvement, mixed. Maybe you're getting a little bit of planning. And then if you're over 6, then you're getting a good planning situation. So the difference comes down to, are you filing things in a look behind kind of way because taxes are filed the following year for the prior year? Or are you operating this year trying to figure out what we can do now in order to alter that filing in the future? So that's the fundamental difference between compliance and planning. Look behind, look ahead. And the look ahead has way better results. I'll tell you that. Oh,
So
and
just
if
being more
anybody wants that
proactive.
checklist, just send us an email at office@TaxSherpa. We'll send you a copy.
So just being proactive, Neil.
Yeah, being proactive. That's
Yeah.
fundamentally it. If your relationship with your tax professional is, yeah, at the end of the year, you hand over your papers and say, here's my stuff, and they fill out the form, and they say, here you go, then you're not getting tax planning. You're getting compliance, which has to be done, right? It has to be done accurately, it has to be done correctly, and all this kind of stuff. That is the end of the process, not the main part of the process when it comes to planning. We're talking to clients now about, oh, what should your payroll be if you're paying yourself from your business? There's a mathematical answer to that. And it depends on what else is going on in your life. If you're looking at, we were talking to a guy yesterday, and he was talking about buying a new business. What kind of things do we have to think about in his particular situation? What are the considerations? Should it be a C Corp? Should it be a pass-through? And he's already got a management company set up. Should whatever acquisition he does, should it pay that? All these different kinds of things that we work through on an individualized basis. That's the kind of things that you get with actual planning rather than just compliance.
So you would say the same amount of time that you spend with your financial advisor should be the same amount of time you spend with your tax advisor.
That's a good question. Yeah. Because for most people, especially small business people, their largest single expense is taxes. So whatever you can do to alter that number is going to have a large impact. And I always wish that when we generate tax savings for people, that they take that money and invest it for the long term. Realistically, rarely happens. Most people use that for operating capital or they just spend it or whatever. I had one guy who bought a boat after complaining to me all day for filing his taxes that he was broke and everything. I've had other people tell me, sitting in my office, saying, I need like this amount of money because I'm taking the kids to Disney. So you're just complaining to me that you don't have any money. Why are you taking the kids to Disney? Because Disney's expensive. Even back then, when that was having that conversation, it was expensive. Ideally, the perfect scenario would be you do tax planning, save a whole bunch of money, take that money, work with your financial advisor, invest that money, and generate yield over time. That would be ideal. And then that lightens up the load that you need to generate in terms of active income because your passive income will grow and grow. Now, I'll put passive in quotes because there is no such thing, but dividends, triple net leases, these kind of things are pretty much as passive as you're going to get. They still require management, but it's less than operating a business, for example. That would be the ideal situation.